Hey guys, it's Dale with The Insurance with your quirky question of the week. This week I actually had to do some research. We had a very obscure question about a product that's not very popular, but there's obviously demand out there because it's sold. It's called mortgage protection life insurance. Pretty simple, right? It's not to be confused with PMI, private mortgage insurance, which is the insurance you purchase typically when you purchase a home and you put down as a down payment less than 20% to cover the lender for any defaults on the monthly mortgage. They actually require you to get mortgage insurance. That's PMI, that's private mortgage insurance. This, on the other hand, mortgage protection life insurance, is almost like term life insurance, but solely for your mortgage, right? So, God forbid something bad happens to you, any of your dependents or your family that might be laden with that debt burden, that mortgage burden, then that MPLI is what it's called, mortgage protection life insurance, that would kick in for that purpose, those mortgage payments specifically. So I guess the question that to answer our customer's question directly, it obviously depends on the circumstances. The one reason I can see, or the one scenario I see where this makes sense, where MPLI is a viable option, is when you're looking to get term insurance, right? But for some reason or another, you can't get term insurance, right? Term insurance is underwritten. Sometimes it's very strict. They have age limits. It can be very expensive. MPLI, on the other hand, doesn't have as many restrictions because it's not scrutinized and underwritten to the level of term life insurance. So oftentimes, and I won't say 100% of the time, but oftentimes MPLI will be far cheaper than term insurance. So if for some reason you can't get term, I would say to lessen that debt burden for any dependents, if something were to happen to you, then MPLI is a viable option. When you go out to search for MPLI, there are a couple notes I'll give you. One, it's not a fully fleshed out market, so the pricing for this product can be drastically different from carrier to carrier. So make sure you go out and get several different quotes. Just take note that it doesn't pay out to your dependents, right? It's not paid to your dependents, it's paid for the mortgage. It's not as if the dependents will be able to choose where they allocate these funds. These funds are going to be allocated to the mortgage. And then the other caveat, make sure you actually look at the policy, you look at the benefits, because there are some carriers whereby the actual payout amount decreases over time as your mortgage, as you pay down the principal, right? So you're paying down the principal, but you're still paying kind of your monthly premium, yet the payout goes down along with the principal. So those are a couple factors to consider if you are in the market for mortgage protection life insurance. That's our quirky question of the week. Remember, send all questions to questions@einsure.com, and we'll chat next week. Take care.